was a big day in markets today, and it's also a big day after hours. Sheila Dharmarajan can join us right now to give us that Netflix rundown. And Sheila, by all accounts, what I've seen at least, looks to be like Netflix doing an Apple in terms of beating every single metric.
Well, CEO Reed Hastings certainly winning the good graces of investors, at least for this quarter. The stock up as much as 14% in the after hours. Let's recap some of those headline numbers. Netflix really beating on all accounts when it comes to fourth quarter results. So EPS of 73 cents a share versus expectations of 54 cents a share. Also a beat on the sales line, 876 million versus 856 million of estimate. Let's get to the subscriber numbers because that's what folks are really looking for. Remember, Netflix had lost about 800,000 subscribers during their kind of business roller coaster ride. This quarter, they did add around 220 subscribers, so a little bit higher than what folks were expecting. The DVD business, we know that this is a declining business, but the good news didn't decline as much as people thought. Adam, sending it back to you.
All right, Sheila Dharmarajan, we want to bring in Hudson Square analyst Dan Ernst. Why? Because he is one of the few remaining buys on Netflix. He also happens to have the highest price target of all the analysts that are surveyed by Bloomberg. So, Dan, thanks for joining us. I got to ask you, you're the big bull out there. Are you surprised by this, or is this kind of what you expected?
Well, let's add the color there that actually we had to sell for the 18 months, from 100 to 300 back down to 70. So our buy is actually not remaining buy. It's actually a relatively recent thing. We did it in October. So actually, yeah, we thought that over the what I call the dark, cold months of December through the March quarter, without real competition in a subscription service for $8 a month, that yeah, subs would come back because there's not a whole lot other place for them to go. So I think it kind of played out that way. Sub beat was good overall. There was one negative in that their net streaming subs was a little bit lighter than we had anticipated. But this is early on how they're starting to report this new metric. The other thing, profitability of the domestic business, streaming business, was a lot better than expected, about 260 basis points above our number. So the company slightly raised guidance for the progression of that starting in Q1 here. The guidance for Q1 looks good. So, yeah, things look good.
Dan, quick question. You mentioned the fact that they actually changed their accounting methods based on the way they're looking at the company now, DVD versus sort of the streaming business. Is there any chance that perhaps today's huge beat may not be as big as we think?
No, I think that it is. Like I said, the one negative was that actually that the streaming portion, this is, this is the first time they started to break it out separately. They gave us a little bit of color on it the last two quarters, but now this is the official split, so it's kind of hard to say. But the other interesting thing is it looks like the number of subscribers that stayed with both services, which is at a higher ARPU, was much higher than expected. So there was people who were doing the DVD and the streaming. So I think that's pretty positive. Even at $16 a month, I still think it's a very good value to consumers, and that's why I guess consumers stay with it.
All right, we got to leave it there. Thank you, Dan, for joining us. That was Dan Ernst of Hudson Square Research. Comments on out on Netflix. He actually put a buy, not a fairly recent buy, back in October on the stock.